The ACC kicks off the earnings season for the cement companies today. While construction slowed down during monsoon, leading to a drop in demand, cheaper raw material prices may just provide a cushion in the second quarter. Nikki Mirchandani is here to take us through those details. Nikki, there is, I believe, very little cheer for the cement companies this quarter.
Right now, but things are not as bad as they're painted, Neeraj, because we got to bear in mind the fact that there have been easing pressures, which in turn may just offset the kind of subdued demand that we are otherwise seeing coming in from the realization, because of which the unitary performance might just look decent, at least for the pan-India players, at least on YOY basis. But then let's look at the volume performance of overall first the pan-India players before we get into the details of ACC. If you look at the volume growth figure out there, YOY basis, the numbers look subdued out there. We're looking at a 1.5% decline for ACC. Ambuja, it's a 3.5% downtick. Ultratech, it's relatively a growth out there, 5.7% kind of a growth figure. But if you look at that of a sequential performance, it's negative for all the players. Clearly, we're seeing more slowdown coming in from demand on account of slowdown in the execution of infra projects due to a variety of reasons. It is extended monsoons. Second, it's floods in certain areas. Then it's the festive season and lack of funds, essentially, which has been impacting the demand of the entire pack. Ultratech, on the other hand, is expected to see some amount of traction. That's also a trend which has been playing out from a couple of quarters now, due to strong volume growth thanks to the consolidation of Benani. So that's one bit, and also the fact that it's got presence across all the geographies is also helping Ultratech Cement clock that 5% kind of growth that we're expecting on YOY basis. But if you look at the unitary or the EBITDA per ton performance of these players, we're looking at least a kind of uptick coming in on the year-on-year basis. But then we're looking at a sharp drop on sequential basis. Two reasons: volume and realization. If you look at the cost-saving methods or the pressures, they are seeing substantially easing off only on YOY basis as compared to sequential basis. That's why you're seeing that kind of uptick there. But if you're just supposed to look into the ACC's performance...
Yeah, because that's the one that is coming out with numbers. So what is, or will the lower costs work for ACC this quarter?
That's what we're expecting, at least EBITDA per ton performance. That's what the expectations are. But then I'm going to, first throw up the basic numbers first, where top line growth, we are expecting a 4.3% uptick there at a number of around 3,508 crore. EBITDA, we're expecting a 14% growth. Margins are expected to expand to 14% as compared to what we saw in the corresponding quarter. That's 13%. Essentially, the key matrix, volumes, 1.5% downtick, almost flattish out there. Realization, however, we're expecting a 6% growth. That is expected to aid the unitary performance. That's the EBITDA per ton. We are expecting a 15.3% performance out there. In this quarter, if we talk about the easing pressures, Neeraj, it's the domestic pet coke prices essentially, which has fallen by as much as 16% year-on-year basis. Diesel price, they've come down by 6%. That is expected to weigh on. That's expected to aid the freight cost of the companies. A combination of this is expected to aid the operational performance of most of the cement companies.
Numbers likely post-market hours?
Yeah, we're expecting somewhere in between. Not sure about the second half, maybe.
Okay, second half. Definitely not the first half. Maybe during market hours, maybe post that. We'll wait and watch. Nikki, thanks so much for putting that into perspective.